What is going on, cryptocurrency investors? My name is Landon. Welcome to Crypto Review Central. On this channel, you can find daily cryptocurrency videos that cover a wide range of topics. This channel is evolving into a more advanced look at the markets, including, but not limited to, fundamental analysis, as well as anything that is trending in this space. Earlier on this week, we looked at the price of Bitcoin, along with the altcoins getting a moderate boost while hovering at very low values in the months prior, while the rest of the world speculates on the viabilities of cryptocurrencies as a whole. The development teams in this space make the partnerships that will take blockchain technology into the forefront of human evolution. The engine that is cryptocurrency continues to churn. Bitcoin has found support above $6,300, and that big pump not only in volume but in price that has relatively been sustained in VeChain that happened earlier on this week. They're still up 17% with a $39 million 24-hour volume. They spiked to almost $100 million in 24-hour volume during their height and hitting almost $1.50, but have still retained many of those gains. Ontology also pumped and has retained a good chunk of the gains, getting the highest pump to almost $3, $2.80, is now $2.37, but really came from like $1.16 just a few days ago. Volume has maintained its high level of $155 million right now, but spiking to $250 million, and it did find bottom once again at $1.81 and then has been pushed back up, which is yet to let up. So time will tell what's going to happen with Ontology, but a lot of it, as is with the rest of the assets, is dependent on the entire market cap, is dependent on Bitcoin dominance, and a variety of other factors. Nano was by far the star of this week, getting a volume pump to $25 million, which, as you can tell, looking at something like Ontology, is nowhere near the volume that Ontology had, but still, the spike was there, and the price increase was dramatic, hitting, I believe, 60% at one point, and peaking at about $1.88 from a low of like 85 cents just a few days ago. Still retaining a good chunk of that gain at $1.69 right now. Time will tell whether all of these assets are going to bottom out and rediscover their bottom, because the market cap in total hasn't really changed. The price of Bitcoin did get a pump about $200 to $6,500 and again has retained a good chunk of that pump. But there isn't a whole lot of market cap increase to sustain some of the growth in some of these altcoins. The big pump that we just endured has calmed down, but the entire market is still green, but not by a whole lot. It's time to reflect and reconsider some positions, set yourself up for what this fall will bring, and hopefully you can continue to make profits while learning a thing or two about the future of this financial technology. I say this often, some assets are talked about far more than they ever get in price action. Notably, TRON is consistently the most talked about asset on Twitter, and in the Tronics subreddit there's a discussion about their consistency of maintaining the most talked about asset, and the top comment on Reddit says, "If only my wallet reflected that claim." Feels bad, man. And it's true. While TRON continues to be a long-term player in this space, and it continues to be talked about, while continuing to hit all of their deadlines in stride, we see very little price action. The past few days were great, don't get me wrong, up over 20% at times, and getting a volume spike that was not expected. The price action in TRON definitely leaves something to be desired though, and I think the majority of the TRON investor base can and will identify with that sentiment. TRON is so far away from its highs of over 20 cents. It has a long way to go before it really generates a lot of profits for its investors, but be patient as it remains a very long-term player in this market. We're going to cover an article on EthereumWorldNews.com talking about the overhyped Bitcoin ETF. This plays on a lot of investors' heartstrings. The idea that you could turn a 1K investment into 5 or 10 through Bitcoin alone is a bit of a misnomer and a pipe dream for many. Sure, if you made the right decisions back in December of 2017 and got in and out at the right times, you theoretically could be rich right now. But that's largely not the case, and many of us, including myself, are waiting ever impatiently for another run to all-time highs, hopefully just like the one we saw in 2017. so that we can make good on our should-haves and could-haves and actually profit a great deal. A lot of this impending hype seems to rely on the idea of a Bitcoin ETF being approved and used. The reality is we are several postponements away from the SEC deciding on this current CBOE Bitcoin ETF, and delays could last until March of 2019, which is 7 months away from right now. And the kicker is they may not even approve it at this time. The reality is that the CBOE may have to revisit their initial proposal and make changes as per the SEC's recommendations. Only then may we see a Bitcoin ETF applied for, another set of delays to accurately assess it, and then a decision which could take us into 2020 for all any of us know. It makes you wonder then, why are so many people waiting for an ETF? And how much impact will a rejection have? How much impact will an approval have? What does it all mean for Bitcoin? Right now, all it means is speculatory price action and a lot of waiting. The markets continue green today, albeit not as green as they have been over the past few weeks, but green nonetheless. All of us are wondering about this Bitcoin ETF, so you're not alone in that. Arguably, Bitcoin's seen its bottom at $5,900 and the market cap at $189 billion. And right now, a number of assets have a bandwagon that's bursting at the seams. XRP, which is another asset much like TRON that's largely talked about on social media and recently has had a lot of really good developments being implemented in a variety of different countries for cross-border payments. There are real roads being built and bridges established where no bridge previously existed, closing some of these financial hurdles that exist with cross-border payments. XRP remains a very hot topic these days, making partnerships that will see XRapid and XCurrent utilized for cross-border payments and as a liquidity tool. Assets like Ripple and TRON are always very talked about. The hype is so big right now that even Verge XVG got a pump in the last couple of days, along with VeChain, Nano, Ontology, Zilliqa, and many more. So many assets fared amazingly this week, so it naturally begs the question, do we really need a Bitcoin ETF? Ethereum World News concludes that we don't, and I personally do agree to some degree and say that this market will continue its rapid development with sporadic price pumps and retracements, and theoretically in time the price action will catch up to the development. I say it often, if prices were any reflection of what development is, we would be closer to a $1 trillion market cap than we are $225 billion. But I digress. I don't think a Bitcoin ETF is needed, but I do think, and I'm not alone in thinking this, that it will add an extra bit of something that the markets can definitely use to push up higher. A crypto market with a Bitcoin ETF could be like current markets but on steroids. Or it could have a dampening effect to the alternative, although I doubt it. The truth is, nobody really knows when an ETF is coming or what impact a Bitcoin ETF will have on the markets. It's largely presumed that it will be a positive effect for prices, specifically Bitcoin, and an overall larger understanding of what this space really is, giving these large hedge funds and pension funds opportunity to indirectly participate in these markets via a safe product like Bakked, which is the new NASDAQ product that we've discussed. But all of that must be discovered when in fact it is approved, that being a Bitcoin ETF, which it isn't, so it's all speculation. Caitlin Long is a 22-year veteran at Wall Street and has been active in Bitcoin since 2012, believes that Bakked, which is a company that's about to be launched in November, is a double-edged sword for the cryptoverse and general financial system. It's a major step in the mainstreaming of Bitcoin and cryptocurrencies, and I agree with that. It's going to bring a lot of awareness of what Bitcoin is, but it's also a double-edged sword, she goes on to say, because it's likely the beginning of Wall Street creating financial claims about Bitcoin out of thin air and not backed by actual Bitcoins, which could offset some of the Bitcoin's algorithmically enforced scarcity. In conclusion, the crypto community has always held its own in the crypto markets. Whenever there was a decline, it would soon correct itself, for the crypto community was confident enough to believe in Bitcoin and other digital assets. Now, with Wall Street walking in with Bitcoin ETFs and Bakked, the crypto community has once again fallen victim to the old ways of thinking that the big financial firms will make the industry great. That is a huge pitfall. And it is definitely a fear that the average cryptocurrency investor like you or I is constantly reminded of. The Bitcoin that was created by Satoshi Nakamoto was really built out of the ashes of the current financial structure. It is a better system that is specifically designed to solve a lot of the long-standing issues with current traditional fiat. So imposing fiat regulations, imposing fiat rules, imposing old way thinking into a completely new paradigm that thrives on innovation is going to quell innovation and dampen the markets in theory, or it could. And there's a lot of publications that are playing with the idea. Like I said, it plays on your major heartstrings about what this market can be, what this market is slowly evolving into, and some of the major accomplishments that this market has already achieved. We talked about what Bakked did in Kenya, bridging gaps in the local tomato trade. And it is assets like this, it's pilot studies, quote unquote, like this, that the rest of the world is going to take notice of. The introduction of Wall Street into these markets is a threat to the very philosophical backbone that cryptocurrency and Bitcoin was created under. Much like what Bank of America said about cryptocurrency, that Bitcoin and its variable assets are a threat to Bank of America's business model, and therefore the threat to a lot of major financial institutions' business models is the same way that I personally feel about Wall Street coming into crypto. It's a threat to the current philosophical infrastructure that this space represents. And we must treat it very seriously and address it accordingly to ensure the integrity of this space is maintained. Participation from companies like NASDAQ, JP Morgan, Bank of America, etc. could have a dampening effect on these markets, whereas they quell in some limited or major fashion the way this market operates, causing a drop in prices and a level of control that's not previously been accounted for. That could radically change the way this market works in conjunction to traditional markets. Right now, this market is completely disconnected from other traded markets. But will that always be the case? I'm not so sure. A number of publications have been commenting on Wall Street entering crypto. Some are more cryptic than others about this utopian or dystopian-like cryptocurrency markets that Wall Street could bring about. NewsBTC reports that the interest of Wall Street firms towards opportunities in crypto custody and asset management has continued to increase despite the overall drop in prices that we've seen throughout the first 8 months of this year. Analysts have refuted recent reports about the struggle of cryptocurrency exchanges and stated that digital assets trading platforms have been recording solid volumes, generating large revenues. Because regardless of how well the markets are doing, these assets are still getting traded, the commissions are still being made. That makes a whole lot of sense. While the average investor may have gotten wrecked 3 or 4 times over, and the community taken a big hit, a number of these assets are down. We're down at one point almost 80%. The exchanges are flourishing. Some of the world's largest banks are going to take notice of that, and they are going to actively seek out asset management positions within this space, as well as their major clients are also going to be taking an interest in this space, so there's going to be opportunity for commissions there as well. David Solomon, the CEO and chairman of Goldman Sachs, said that the bank has been exploring the possibility of providing cryptocurrency-based derivatives. Goldman Sachs have already been clearing Bitcoin futures on behalf of their clients, and it's possible that given the thriving business models of cryptocurrency exchanges, that Wall Street firms, hedge funds, and investment companies are going to begin to facilitate cryptocurrency trades, targeting US markets and all of the associated profits. Square app as well as Robinhood have been offering cryptocurrency trading since early 2018 and have continued to express their optimism towards the increasing demand for the crypto markets. So many more companies are entering this space and taking a serious approach to what potential participation they can have in this space. A number of these companies have shown tremendous confidence in exploring this market, so it's only going to increase. There are so many more questions than there are answers for what is happening in this space, and I do feel it is going to happen rapidly and before our very eyes. And if you are uneasy by the idea of Wall Street entering this space, join the club. No one does know the future of the cryptocurrency markets, if it can indeed fill the giant shoes it needs to and solve many of the world's long-standing chronic issues, all we can do is continue to monitor these markets. And that is just what I'm going to do here at Crypto Review Central. At a relatively low market cap, for where many experts and noobs alike thought we would be approaching in September of 2018, it just goes to show you that reality ends up being far different than what you envision, and it's about how you react to the constant change. I really do hope this space can become what we know it can, and if Wall Street does come on board, as they are slowly trickling in, they do so with no harm intended, which is a bit delusional, I know. And ideally they come on in a productive and innovative way, helping push the envelope of accepted practice and wealth distribution. The potential social impact for cryptocurrency is profound and has already begun to happen around the world. Stay tuned, it's going to be one hell of a wild ride. Continue to follow our daily content on this evolving cryptocurrency space. I provide daily analysis on the trending topics, so smash that like button if you've enjoyed the videos and subscribe if you haven't already. We have an entirely new giveaway structure in the description below. Make sure to leave a like and comment and let me know what you think about my opinion on Wall Street entering cryptocurrency, on the future of a Bitcoin ETF. And thank you once again to the CRC crew for your continued support. This bear market could be over. Do all of your own research and happy trading, everyone. I'll see you all in a couple of days.